Hello guys, welcome back to my YouTube channel Options Behavior. So today we are going to discuss about a specific strategy, okay, wherein most of the traders think, okay, means whenever I make any iron fly strategy wherein we sell ATM options, right, and we buy some OTM options to hedge that position. But what happens is in a drastic move, right? Whenever market moves drastically, either upside or downside, so what happens is our position starts coming into losses, right? So sometimes what traders think like why shouldn't we take a position wherein whenever there is such a volatile movement happens right in the market in any of the direction. So in that situation, I should be I should be in profit. Okay, so since market can move in any of the direction, right, and like there would be hardly situation where in maybe in few days only market remains at the same position, but most of the times it moves, right? Maybe 200, 300 points nowadays. It's very very frequent that Nifty makes a movement of 200 points or 300 points in a day. So in that situation, like even if we create iron fly, right? So there is a risk of losing, to be in loss, right? Because of the volatile movement. One side starts move, the movement starts happening, in one of the directions suddenly, and what happens is uh, the other side of the premium that we have sold does not decrease that much. Rather, one side of the premium sold increases heavily. So in that situation, it gives us losses. So in order to avoid that situation, or if we are sure, or if we are, if we are in a view of okay, market can move in any of the direction at least 200 to 300 points, okay, maybe in a couple of days or 3 days, whatever it is, okay, at least in a week. So uh, if you have that view or if you have that thought, okay, in the market as per the current situation, so you can make this is strategy very easily, okay? And if the market moves in any of the direction, right, maybe at least you should be having at least 250 to 300 points movement, okay? So you will be in profit. So 200 to 300 also will work, okay? So in this situation, you'll be in green zone, okay? Although the risk to reward ratio will not be that much favorable. The reason is since uh, the other side, right? Either of the side will not give you that much profit. Okay, but anyway, if the movement happens, you will be in profit. Although in the risk to reward ratio is not favorable, but at least in terms of percentage, right? You're gonna get 2 to 3% easily of your deployed capital. Okay, so 2 to 3%. Okay, means in such a volatile market, if you are gaining in a week, that is really a good profit, right? Even if you're making 1.5% of profit, right, and you don't have to do worry about even market crashes so heavily, or even if market rises so sharply, okay, because of any insider news and all, okay, you are not sure about the direction, then this is strategy is going to be very fruitful and very useful. So, and most of the folks, they basically have the fear of, okay, means even if I make iron fly, and if the market moves, drastically in any of the direction, then in that case, obviously, there is a chance of um, uh, uh, losing our, money, right? So, but this strategy will save you. This strategy basically is useful in that situation only, wherein you do not have especially when there is a uncertainty in the market, right? When there is not sure about the movement of the market, and it is now nowadays it has been quite frequent days wherein market takes a move of 200 or 300 points, right? So in that situation, you can simply think of this strategy, and this is going to be really useful if you are having that view, and especially if there is a result session, right, when most of the means banking sector or IT sector, they declare their results and all, right? So in that kind of situation, this strategy is very useful, because we are not sure, like, the heavy weightage banking sector, maybe HDFC Bank, if there is a result of that, HDFC Bank or ICICI Bank, right? So if they, if they declare bad results or good results, so depending on that, right, the market becomes very volatile. It can move 1,000 points, right, easily, or maybe 200 points of Nifty easily, right? So in that kind of situation, you can make this strategy, and this will be really, good in that situation. So what you will have to do is, here we will be making all the position in call side, okay? Because this is called a short call condor, okay? Short call condor means we are not sure about the direction of the market, but still we want to make the money if the market moves in any of the direction violently. Okay, so in that situation, what we will have to do is, always to make this strategy, you will always have to focus on call side. Okay, so what happens is, so let us discuss about the concept and how this strategy can be created. Okay, so this is so simple to create, guys. What you will have to do is, you just note down the means for example, if you're trading in the current week, right? So today is, I mean, this weekly expiry is on 6th of January, okay, and today is 1st January. So what will happen is, okay, if you want to make this strategy on this particular week, okay, so just make a selection of that week, okay, and just note down the spot price. Okay, so here it is 17,354. Okay, so what you will have to do is, you will have to sell one of the in the money call, okay, deeper in the money call, and you will have to buy another call, but that should be also in the money. Okay, but the premium will be less than whatever you have sold. Okay, so what is the first condition? The first condition is, you will have to sell, the in the money call, okay, and you will have to also buy an in the money call, but that will be one strike above whatever you have sold. For example, if I am selling, if I am selling 17,200, okay, so this is in the money call, so I am buying a call of 17,300, which is again in the money call, okay, but this is one above, one strike above than the one that we have sold. Okay, so both are in the money call. Why this is also in the money call? Because spot price itself is trading as 350, right? And we are selling, we are buying a call of 70,300. That means 54 points in the money, right? So we have to sell a bigger one of the in the money, and we have to buy also an in the money call, which will be one strike above the sold call. Okay. Similarly, what you have to do is, you will have to buy an OTM call, okay, and you will have to sell another OTM call, which will be again 100 points above from the bought call. Okay, for example, if we are buying 17,400 call over here, which is OTM call, why OTM call? If we compare through a spot price, which is trading at 70,350, and we are trying to buy a call of 70,400, right? So, which is an OTM call, and we are again selling a call of 70,500, which is 100 points away from the one that we have bought, right? So, we are selling this call. So, if you take this strategy, okay, so the graph will look like this. That means, in any of the direction, if the market takes any direction, violently move, right, you are gonna make money. But definitely there is a chance of losing if the market, if your view goes wrong, if the market stays at the same place, if the market does not take a movement of 200 to 300 points, then there will be a chance of losing that, right? But this strategy is basically, created in the view of that market can take and can go in any of the direction violently. Not violently in the sense, at least to 200 to 300 points. And nowadays it is very common, guys. It happens. So at least you will be able to make some profit if the market moves in any direction. And m- uh, I have already explained, right, like how to create and when to create. So I am sure that this video will be helpful, guys. So if you have this view, you can simply make money out of this strategy. And if you have, I mean, I will also make a video on, on a very tight range. Okay. So obviously that is an iron fly, right? Okay. So that I've already explained, but maybe I will also explain on in case of, if the market starts moving and it starts going in your direction, right? So how to manage that trade, right? So I'll be also, but for that to manage, we'll have to have uh, some capital because we'll have to start selling, okay, so that we can make our delta neutral. Okay, so that will be another video that I will be making on in the view of, okay, market can remain in some range bound, okay, and it can give you some profit. Okay, so that's a different part, but this strategy is all about, how to make money if the market moves in any of the direction, but you are not sure on the direction. And nowadays it is very common that it takes a wild move, right? Okay, guys, so this is all about this is strategy. I'm sure you would have I mean you will share this video with your friends and colleagues and family, and do share, like, and subscribe this channel. Thank you so much.